What's up, Rockstars? It's John here, and today we're talking about 1031 exchanges, also known as like-kind exchanges or a Starker exchange. If you're a real estate beginner or a seasoned real estate investor, you've probably heard of 1031 exchanges, but if you haven't, you should definitely stick around for the video. Today, we're going to be talking about what a 1031 exchange is, what some of the requirements of an exchange are, and how we might use an exchange in the real world. This is a critical thing to understand if you want to invest in real estate. It's a critical thing to understand if you want to create generational wealth with real estate. If you want to leave buildings to your kids, if you want to make sure that the people who come after you are richer than you were, this is the place to be, and you need to understand it. Okay. Let's get started. What is a 1031 exchange? A 1031 exchange is a swap of one real estate investment property for another that allows capital gains taxes to be deferred. If you don't like paying taxes, at least not immediately, a 1031 exchange is a way for you to not pay taxes on the gains of your real estate. Side note, a capital gains tax is the tax you pay on the gains from the sale of an asset, like a house. Capital gains is split up into two types: short-term capital gains from the sale of an asset held for less than 1 year, or long-term capital gains, which is the sale of an asset held for more than 1 year. Short-term capital gains are taxed higher than long-term capital gains. Whenever you sell an investment property for more than what you paid for it, you will incur capital gains tax. Okay, we've sold an investment property for more than we paid for it, and we have some pending capital gains that we expect to incur. We want to defer those capital gains with a 1031 exchange. What are the key takeaways and what should we keep in mind? 1031 exchange is a tax break. You can sell a property held for business or investment purposes or swap it out for a new one, allowing you to defer capital gains tax on the sale. Sometimes this exchange is called a like-kind exchange, which is what it means by exchanging property like for like. Let's quickly define like-kind when it comes to real estate. When we think about real estate, like-kind means any other type of real estate that we use for an investment purpose. You can't sell an investment property and buy a new single-family home. That would not be allowed. But you could sell your duplex and buy an office building, or land, or another office building, or an apartment complex. Like-kind exchange for real estate really just refers to investment real estate of any kind. Let's say you've sold your investment property and you're now looking to perform your 1031 exchange. Proceeds from the sale must be held in escrow. This is usually held by a third party that's then used to buy the new property. The proceeds from the sale must be held in escrow by a third party. That means you can't touch them. If you touch the proceeds from the sale of your property you want a 1031 exchange, it's likely that the IRS will deny your 1031 exchange. So make 100% sure that you're using a qualified intermediary that can hold the funds and process the exchange for you. If used correctly, there's no limit on the amount of 1031 exchanges you can perform. And lastly, under specific circumstances, you can 1031 the capital gains from a principal residence. Okay, so what would be a common example of someone performing their first 1031 exchange? Let's say that you bought a house in 2016 and you lived in that house for several years before moving into a new home and renting out your former principal residence. 5 years later, it's been a rental for that whole time, and you decided it's time to sell the property. This property does not qualify for a capital gains exemption as your principal residence. You have to have lived in the property for the last 2 of 5 years to qualify for that. In that case, when you sell the property, you'll either need to pay a capital gains tax on the gains from that asset, or you'll need to do a 1031 exchange. If you chose to do a 1031 exchange, what you might do is sell that property, transfer the funds to a qualified intermediary at closing, identify a new property, and then purchase that property with your proceeds from the like-kind exchange. There's some things about the transaction that you really need to keep in mind, such as proper identification. After selling your investment property, you have up to 45 days to identify proper replacement properties that you'd like to use for your 1031 exchange. This identification should be done in writing to your qualified intermediary who is holding the funds for your investment property sale. There are some specific identification rules to keep in mind, such as the 3 property rule, which is you can identify any 3 properties regardless of their value in writing by the 45-day deadline to your qualified intermediary. There's also the 200% rule, which you can identify as many properties as you like like, as long as their total value does not exceed 200% of the property that you're selling. We do have an acquisition deadline. That is, we have to close on the properties we'd like to use in our exchange 180 calendar days after the sale of our investment property. We must use a qualified intermediary. The qualified intermediary is an approved third party that holds the funds from your relinquished property until you identify and purchase your new property. You must have no receipt of cash. That is, you cannot receive a single dollar of your 1031 exchange as cash to you. All of it has to be held by the qualified intermediary in order for you to qualify for the 1031 exchange. To defer all capital gains taxes, you have to use all proceeds for your exchange. If you don't use all the proceeds from your exchange, you will have a tax liability on the proceeds that you didn't choose to exchange. Those proceeds are often referred to as a boot. The same taxpayer that sells the property must be the same taxpayer that uses the gains to purchase the new property. That could be the case of an individual, or in the case of a partnership or LLC, the employer identification number, or EIN, which is like a social security number for businesses, must match. If they don't match, you don't qualify for the 1031 exchange. And then no primary residences qualify for a 1031 exchange. You cannot purchase a primary residence with a 1031 exchange. You can purchase vacation or rental homes with a 1031 exchange. Okay, John, that's really great. All that investment mumbo jumbo is awesome, but like, how do I use a 1031 exchange in the real world? I'm so glad you asked. Let's talk about a real world example of how we might use a 1031 exchange, and we're just gonna keep it pretty simple. Let's say we buy our first home for $200,000, and we put 10% down on that first home. So that's $20,000 in equity. And now that house is worth $400,000. So in addition to our 20% down, the house is now worth $200,000 more. In a very simple world where we're not thinking about amortization, we would say that the gain on that real estate is $200,000. If we assume that this investment property, we could put 20% down on the property and the rents on the new property would support 80% loan to value, well, then that means that we could purchase a property that's, drumroll, $1.1 million with our $220,000 down. Now, you can see where this can start to get powerful. You bought a property that was worth $200,000. 5 or 6 years later, you have $220,000 in equity, and now you can own a building that's worth over $1 million. And what happens in 5 years? Well, 5 years from now, maybe that $1.1 million building is now worth 1.6. So in the case of that building being worth $1.6 million, we take our $1.1 million purchase that we made. We are left with $500,000 in gain from the sale, but we also have $220,000 in equity that we put down on the property in the first place. So $220,000, you now see we have $720,000 in equity that we could use to exchange into a new building. Well, let's say the rules are the same and we could get 80% debt on a new investment property. That means that we can take our $720,000 after our initial investment 10 years ago, and we can buy a property that's worth $3.6 million. Wow, did you ever think that you could own a property that's worth $3.6 million? Well, if you have gains from the first property you ever bought and you continue to 1031 exchange them, you can see a world where in 5, 10, or 20 years, you could own $3, $4, or $5 million in real estate if you just continue to roll the gain forward. And that's the power of a 1031 exchange, is you're putting off the immediate gratification of receiving that cash, you're not paying the capital gains tax, and then you can see a world where your leverage and rolling this profit forward really starts to create generational wealth inside of real estate. It's how a lot of the very smart and rich real estate investors do it. And at death, you can do a step-up basis, which means that all of the capital gains tax that you would have paid are essentially rendered to zero, and you can leave the property to your kids. That's how the 1% gets really, really rich, is they just leave all the real estate to their kids. Their kids don't pay any of the capital gains tax that they've 1031 exchanged this whole time, and everybody stays really, really wealthy. All right, rock stars, thank you so much for being here with Top Rock Real Estate to talk about 1031 exchanges. I try and fit these videos in under 10 minutes. I'm really trying to push as much value to you as possible. So if you really liked the video, which I hope you did, let me know in the comments. All the details to contact me are in the description. I'd love to talk to you about your 1031 exchange. I'd love to model some real estate for you. I'd love to just be a sounding board for your next step inside your real estate career. If you're in Colorado and you're looking to buy or sell a house, I'd love to help you. I'd love to deliver pre-listing packages jacket or a buyer's guide. I do this every day. I really love it. I'm super passionate about helping you make your next steps in real estate, and I'd love to help you. If you like the video, we'd love it if you could subscribe. Love it if you could like the video. If you want to reach out to us and talk to us, text me, call me, email me. Yeah, thank you.